To tell us more about what's been making headlines in finance and economic news this week, we're joined by Suzanne Haddan, who's the Managing Director at BFG Financial Services. Suzanne, thanks for coming in.
Good morning.
Today. Now, we heard a bit from the RBA yesterday. What did they have to say in that monetary policy?
They're letting us know that there's a evenly balanced probability that actual interest rates might go down as against up. And that's a real change in position. What we need to remember is when interest rates go down, especially from 1.5%, that's generally bad news about the economy. And the governor went on to say that they're very concerned about the level of spending. December was down. They're concerned about property prices. In Sydney, we're down from the highs 11.1%, Melbourne over 7%. And also building approvals have dropped dramatically. And they're a huge employer, not just directly, but associated companies. So there's concerning headwinds. On the upside, rental growth has been lower. So if you're a renter, you're probably in a better position now than you were previously.
Suzanne, another thing that interest rates obviously impact is the dollar in terms of international trading. If we have lower interest rates, does that mean an even weaker dollar still?
Generally it does, Josh, because people don't want to put money in the country if they're going to get a lower return on it. So it's not so good if you're travelling, but it's good if you're exporting.
Yes, right.
We had comments made by the RBA Governor Philip Lowe, and that saw the Aussie dollar tumble. Why did that happen?
Well, it's letting the market know that the RBA is concerned about some of the headwinds. And bad outcomes in an economy generally don't attract more dollars into the economy. So the first one we just discussed was the interest rates. And how does that flow through for our GDP? Because that's our economic growth. The Reserve Bank has dropped the forecast for next year, or this year, from 3.3 to 3%, plus dropped their growth in consumption. So there's some concerning issues there.
Mm.
Now, also we've been talking a lot about the Banking Royal Commission.
Haven't we just?
Obviously. How have the markets been responding this week to those recommendations?
Well, interestingly, always follow the money. And when the report came out, I was thinking, great, we're on a journey. But boy, there were some disappointing things. And obviously the banks liked that because the next day the bank shares went up $20 billion. By the end of the week, the financial services index on the stock market was the best performing, 6.7%. The area that did drop was the mortgage brokers because there was a lot of negatives in the report for them. But the report missed some great opportunities for change, I think.
What happened at NAB this week, Suzanne?
Well, the Royal Commission has already had some scalps. You think of AMP, we had half their board go and the chair and the CEO, and looks like there's going to be some criminal action. Now, in the Royal Commission report, there were specific criticisms of the NAB chair, Ken Henry, a highly regarded expert, and also the CEO, Andrew Thornburn, and they've fallen on their swords and have resigned. Interestingly, I don't think it was just about the Royal Commission comments. They've had a lot of problems with remediating customers for the fee for no service scandal. And Commissioner Hayne was pointing out his concern that they haven't got the right attitude to make that happen. So I don't think they'll be the last ones. There's been quite a few referred for potential criminal action.
When you say the Royal Commission recommendations missed some key opportunities, what were they in your opinion?
The major one was what we call vertical integration. And that's where the group giving you the advice is also the group trying to flog and sell them their products like life insurance, superannuation, mortgages. And that's a structural flaw because it creates a conflict of interest. As a foundation principle for financial services, it should be separate the advice giver from the product supplier. If they don't do that, then I think we're setting up for another Royal Commission in future years.
Because that was one of the key problems, that the advice giver was not necessarily acting in the interests of the customer, but rather the bank or the
You can't serve two masters. You need to, when you seek advice, I would assume you'd want to know that that advice is in your best interest and they're only concerned about you. Product is just a tool to achieve some of your goals, whereas product has been the driving force in the advice because there's still conflicted remuneration being paid.
Suzanne, hasn't that been fixed in the independent financial advice sector? It's my understanding that that a financial advisor now, if they're independent, has to have a fiduciary responsibility primarily to the person who they're advising without taking commissions from the things that they're selling. Why doesn't that also apply to a big bank?
Okay, so with the big banks, they don't give independent advice. In fact, there's very few of us who do give independent advice. And the Commissioner went right to that point and said, now, if you're not independent, you're going to have to clearly tell the client why you're not independent. The issue with the banks is there's still commission, Josh. There's still commission on insurance sale, and that there was a plethora of cases that showed poor outcomes for the customer because they kept selling policies to get the payouts. So the best interest duty does apply to the banks, but some conflicts of interest, in my view, can't be advised, they have to be avoided.
Now, many customers will be receiving compensation, but they're actually going to have to pay tax on that, aren't they?
Now, I don't want to put fear in the hearts of those receiving the compensation, but as a broad principle, because it could be over $1 billion, the ATO will be waiting in the wings for their share. Not all compensation will be subject to tax, but many will be. If you received a tax advantage, say you got a refund of your fee that you claimed on your tax return, you will need to declare it.
All right, something to keep in mind. Suzanne Haddan, thanks for coming in this
Thank you.